Whether you're just starting out or looking to diversify your portfolio, these strategies will help you make informed decisions and grow your wealth. Welcome back to Creative Cruise, your go-to source for personal finance and self-improvement. Today, we're diving into the world of investments with our video, Top 5 Investment Strategies for Beginners. Let's get started. Number 1. First up, we have index funds. Index funds are a type of mutual fund designed to replicate the performance of a specific market index, such as the S&P 500. They're popular among beginners for their simplicity and diversification. Pros: low fees due to passive management. Broad market exposure, reducing risk. Historically solid returns over the long term. Cons: a limited flexibility as they mirror the index. Subject to market volatility. Start by researching reputable index funds from well-known firms like Vanguard or Fidelity. Most brokers offer easy ways to get started with low initial investments. Number 2. Let's talk about dividend stocks. Dividend stocks are shares in companies that regularly pay out a portion of their profits to shareholders. This strategy can provide a steady income stream in addition to potential capital gains. Pros: irregular income through dividends. Potential for stock price appreciation. Can be reinvested to buy more shares and compound growth. Cons: dividends are not guaranteed and can be cut. It requires careful selection of reliable companies. Tax implications on dividend income. Look for companies with a history of consistent dividend payments and strong financial health. Dividend aristocrats are a great starting point. Number 3. Our third strategy is investing in real estate. Real estate can be a lucrative investment, offering both rental income and potential property appreciation. Pros: tangible asset you can see and manage. Steady rental income. Potential for significant appreciation. Cons: high initial investment and maintenance costs. Requires active management or hiring a property manager. A market can be illiquid, making it harder to sell quickly. Start with residential properties or consider real estate investment trusts, REITs, for lower entry costs and easier management. Fourth on our list are mutual funds. Visual: various mutual funds with different focuses. Mutual funds pool money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other securities, managed by professional fund managers. Pros: professional management and diversification. A wide range of options to suit different risk appetites. Easy to buy and sell. Cons: management fees can eat into returns. Performance depends on the fund manager's skill. May not beat the market. Research mutual funds with strong track records and low expense ratios. Use platforms like Morningstar to compare fund performances. Last but not least, we have robo-advisors. Robo-advisors are digital platforms that provide automated, algorithm-driven financial planning services with little to no human supervision. Pros: low fees and low minimum investment requirements. Automated portfolio management and rebalancing. Accessible for beginners. Cons: limited human interaction and personalized advice. Algorithm-based decisions may not suit all situations. Some platforms have limited investment options. Choose a reputable robo-advisor like Betterment or Wealthfront. Start with their recommended portfolios based on your risk tolerance and financial goals. Before you dive in, remember that research and risk management are crucial. Understand the risks associated with each strategy and never invest money you can't afford to lose. Diversify your investments to spread risk and maximize potential returns. And there you have it, the top 5 investment strategies for beginners. If you found this video helpful, give it a thumbs up and subscribe for more personal finance tips. Drop your questions or comments below, and we'll be happy to help you on your investment journey. Thanks for watching, and see you next time on Creative Cruise.